Well, hello there. Welcome back to My Life as a Landlord. This is Dr. Jen, and I am so pleased you are joining me today. If you've ever submitted a loan application and felt like your financials were disappearing into a black box, this episode is for you. We're pulling back the curtain on the banking world. Joining me today from Hilo, yay, and that's on the Big Island for all of my
That's the
non-US
island.
people, right? Joining me today is Jennifer Walker, the branch manager at Hilo Central Pacific Bank. Jennifer has seen it all from perfectly polished applications to the ones that make the underwriters break out in a cold sweat. Welcome, Jen. Glad to have you on the
Thanks,
show.
Jen. Glad to be here.
Beautiful. Beautiful. And full transparency, we met because we're both honorees from Pacific Business News 2026 Women Who Mean Business. And Jen and I started talking, and one of the things was, hey, I really wish landlords knew more about this when it came to banking and finance and all of this. And I said, well, why don't we get on the show and talk about it? So that's what we're doing today.
So exciting. Am I
Yay.
prepared? Maybe, maybe not.
Ah, nah, you know what? You'll be fine. We'll wing it, and you know what? That's exactly what people learn from.
Yep.
But tell us, as the bank manager at Hilo Central Pacific Bank, what does a typical day look like for you when you're dealing with your business clients?
Oh man. So we'll focus on the clients then and not the team. I would say, the biggest thing is really building relationship with my business clients. One thing I've noticed with all of them is that they're extremely passionate about their business.
Mm,
It's like their baby. They go from it being a newborn, so creating it, to different types of milestones, to eventually possibly selling it off or retiring from that business. So, biggest thing that I have noticed in my 21 years of being in banking is really understanding the why and their purpose behind their business. And that really captures, everything from what I can help them with, their goals, their dreams. So it's relationship.
awesome. Awesome. Well, many new landlords, and I would dare say as an extension, many new entrepreneurs treat their businesses as extensions of their personal finance. But as you and I've talked, and I've had a couple of different shows on the podcast about personal credit and business credit, those are different animals that a lot of people don't understand. Educate us.
Yeah. So they kind of go hand in hand in a way. I would say there's different types of tiers. So when you're working with a brand new business, it's called a startup. The underwriters are going to pay more attention to your personal credit, right? What does your personal credit look like? Because they can't go off of the business. Then you're looking, after the 2 year mark. The 2 year mark is when, um, the underwriters want to know your profit, your balance sheets, your revenue. You can ask for more. You can increase the amount. We are comfortable at Central Pacific Bank giving $50,000 to a startup business. When you're after that 2 year mark, it can go up to whatever amount that you qualify for based on the revenue of the business. So as far as your personal credit goes, you still want to keep that on tap. You want to make sure that, you're making your payments on time, that you're not overusing, or that you're not doing several inquiries over and over. But then you also want to dive into the revenue of your business. So it's two sections, two parts that really dives into creating a business credit score.
Cool. Okay. Well, let's see. I'm just trying to figure out the best way to ask you about commingling funds between personal and the business, because I love when you say the initial business, it's not, you're all personal because there is no business, but 2 years
Right.
down the road, it's now established business. But what you're saying is you want to do personal and business. But what happens if you keep commingling that stuff?
So commingling, there's different types when you're thinking about commingling. When you working with your assets, you never ever want to commingle your money, the assets, the dollars that are going into the account. Your business is your business. So when you do start up a business, you want to open up a business checking account for the nature of the business, right? And then you have your personal account for the nature of your personal finances. You never want to commingle that. When it comes to credit, you have to have good personal credit to be able to qualify for any type of business loans. There are always exceptions to the rule, right? If you're a well-established business, you've been in business for X amount of years, you have a great, relationship with your bank, there's always exceptions. But the number one thing that you can focus on is your personal credit.
Okay. So if someone is starting a business, so they've let's say they've opened the business bank account, but what are maybe a few steps that they should take to start establishing their business credit?
They can always do business credit cards. So, one thing
Mm,
about business credit cards here at Central Pacific Bank, you don't have to have proof of financials or been in business for so many years. So, what that looks like is you apply for the business, they go off of your personal income, and then you get approved for a business credit card, which is in the name of the business. That could be a start, but you could always apply for a SBA, which is your small business administrative loan or line of credit, even at day one of the start of the business.
cool. Okay. Now, let's circle back to personal credit. What happens if someone's trying to start a business and their personal credit maybe isn't the best?
But we have a lot of those clients because, we mess up, we're humans, miss a payment, things go into collections that didn't know. Stuff happens in the past. So one thing about Central Pacific Bank is we do a lot of credit repair analysis. So what we do for our clients here that makes us different from any other bank is that we pull their credit report. We have access to TransUnion that is on our online banking. So you have to be a client of ours to be able to access it. So we pull up the credit report and we're able to analyze it. We've done a lot of research. We have a lot of data to understand what drives that number, what drives that credit score, what helps it, what hurts it. So we look at what's going on today and what can we do to fix it in the near future. It could be something simple as paying the collections off that was from, I don't know, a phone bill or something, or a medical bill. That seems to be very popular. When you pay it off, you can ask for that collection agency to remove it from your credit or at least show balance was paid in full. When things like that you do on your credit score reflects that. So we analyze the credit, we find out different ways to increase it, and then from there we just put you on the right track to help you get you approved.
Okay, well that's cool. That's really
Mhm.
cool. Well, let's shift gears to underwriting because obviously in banking you've got to, do get some approval from underwriting. When an application hits the underwriter's desk, what's the very first thing they look at?
The very first thing they look at is your credit score. I would say your
Okay.
credit score is it's important. I mean, they don't know you as a person, right? They don't know that that you have that credibility, that you are going to make that payment on time. They don't know you personally. What they know is what they see on your credit report. So yes, that
Mhm.
is number one. Number two is the numbers that you plug into the application. So, what is your revenue that you're making off of your business per year? Are you growing year over year? Are you making profit or are you losing? And then obviously it goes into your taxes. So they'll look at your financials. But so there's that portion, right? Your income, revenue portion, credit score. Then they look at the type of business you're in. There are high risk businesses out there that it's a list that we will never know as bankers. But they have what's called high risk businesses. And a couple that I know because I've submitted plenty in my career is like construction. They're going to consider construction as a high risk business. They're going
Mm,
to consider massage as a high risk business, restaurants as a high risk business. So they look at that, they look at the high risk, and then it comes up with this beautiful magical number that then they say, okay, this is what you qualify for based off of the information you provided on the application.
Okay.
Different little nuggets that they use.
Yeah, well, and it's interesting. I mean, I've been doing this a really long time, and I've kind of got some of the little rabbit holes of, little things that I add in just because I know they're going to ask for different things. Even when they don't ask for it yet, I still throw in things like certificate of incorporation, the articles of organization for, an LLC. And the same thing in Canada, right? Because we have a company in Canada as well. And so this is where I just have to look back and go, there's a lot of people who are just starting in this
Hmm.
who just find all this really confusing, a bit overwhelming. And especially when you're talking, so five C's of credit, like some of
Right.
the programs we're in. So they five C's of credit is character, capacity,
Yep.
capital, collateral, conditions.
Yep.
And what's your take on what's the most misunderstood one from people that, like real estate investors or landlords, which one do you think is most misunderstood? Or maybe all five of them are.
Well, I think the character one is the most misunderstood because in that character is what is guess where we, how I said there's an exception to the rule. So for an example, say that, we submit an application and it gets turned down for something silly on a client's credit report. So like a collection that dropped their credit substantially, that made them decline based off that credit score. What we can do here at the bank is if they have a relationship with Central Pacific Bank, if they banked with us for X amount of years, they've been good, they keep a well-known balance, but their credit score is just not where it needs to be, we're able to look at their character. So we can look at their accounts, we can look at their relationships, we can look at their, accounts receivable, we can look at their tax returns. All that stuff is the character of the person and the business that can help exception to the rule overturn and look at that as an approval versus it being denied.
Okay. Well, and I think there's a lot of people who are just breaking into real estate who
Hmm.
don't understand that, you started off this episode talking specifically about relationships.
Yep.
And that's where that character piece, I completely agree. I mean, there's a
Yep.
lot of people who do not understand that having a great relationship with your lender, with your banker,
Yep.
that goes a long way when they know you as a human, when the
Yes.
underwriter doesn't know you as
Right.
a human, let's say, right?
Exactly. Yep.
Yeah, yeah. Well, beyond the property itself, like I know a lot of real estate investors just jump in both feet, and they don't understand necessarily how important cash flow is.
Uh-huh.
And as an underwriter, beyond the property itself, how heavily does Central Pacific Bank or your underwriters weigh the overall global cash flow, not just that one little piece? Maybe they've got multiple properties or multiple businesses or, multiple partners that are involved in this business. What's your take on global assets, global cash flow?
That is a huge component. So when you're
Mm,
looking at, there's certain tiers. So if you're applying for a small amount, which I don't know is small or large to the average, but I'm just going to throw a number out there. We'll say over $100,000. And you're submitting this application. One of the things that the underwriters do is they do analyze the cash flow. And it's not just the business, it's the guarantor. So if you have the business that's making decent money or revenue, but the guarantor is making even more because they have other lines of businesses that are making the money or providing cash or whatever the case is, and they have several guarantors, we do take a look at that. So you have the business as it's, say it's the person, then you
hmm
have the guarantor as a person and any other additional guarantors. We take the cash flow of each entity, so the business, the guarantors, then we obviously minus the debt. So we have to take the debt of the business and the debt of each guarantor. And that's what creates the beautiful cash flow number at the bottom. So, yes, it's very, very important. Cash flow is very important.
hmm Okay. Well, as the underwriter, evaluates everything, they're inevitably going to start seeing things pop up. They're going to start seeing criteria. Let's talk about some deal killers. Like
Okay.
you already mentioned one about high risk industries, right? But what are some of the other biggest glaring red flags that will cause an underwriter to instantly say, no, this isn't going to work?
Well, you kind of know that the cash flow, if they're not coming
Mm,
up with this beautiful number and it's below the criteria of the underwriter, they're going to turn that down. The credit score, again, personal credit score is a big red flag. If they don't meet the criteria, they're going to turn that down. If it's a mixture of all of it, they're going to turn it down. If your debt doesn't match your income, so I'm sure you
mm.
guys are used to the DTI. They're going to turn that down. I think those are the only really big red flags. So it's your cash flow, it's your credit, it is, oh, and another big one, sorry, is collateral. So if you're requesting a large amount, say like a property, a commercial property, and the amount that you're asking doesn't match the amount of what the property or the equipment is appraised at, that's another turn down.
Hmm.
But those are, I mean, I think those are basically everything. All, all the indicators to get approved for a loan is all
Yeah.
red flags.
So here's a question. If someone is coming in for financing of some kind and they know they've got lower credit or a blemish on their record of some kind, or a past late payment or a sudden drop of income or something has happened,
Okay.
should they lead with that? Should they walk in and say, "Hey Jen, this is going on, but I'm going to request financing anyway"?
Oh, absolutely. I mean, being transparent at the beginning is the most important thing. One thing me and my team, what we do is before we even submit the application, so before we pull credit, we look at the data that you give us and the paperwork, all the finances. We play with the cash flow. We look at all of it. We tell you, okay, from the numbers you gave us, from the information you provided, this is what we think as a banker that you'll get approved for versus giving us the documents, paper pushing it to the underwriters. So we prepare you in advance before you apply and before the underwriters pull their credit. So yes, being transparent from the beginning, giving your banker all the data, all the financial numbers, and what is the purpose of what you're applying for. Be very honest. And then that should help with the transition into the application.
So in my case, if I'm going to buy a property for the sake of renovating it and then either, sometimes we'll CPR it and then we'll sell off one piece, or we'll rent it and then want to refinance, or sometimes we'll sell it. But Mike and I are not big flippers. Like we're not
Mhm.
flipping people. We like to hold things indefinitely. And so then understanding that that's the game plan. And so then inevitably they say, okay, what's your renovation budget? What are you actually going to do with those funds? And we
Right.
know this in advance, right?
Exactly. Yeah.
Yeah.
Yeah. And I would say another thing too, like, especially with, real estate investors and flippers and builders, if you're transparent from the beginning, maybe the option of not going towards the loan route and getting a line of credit would be beneficial for the business. Because if, as you know, if you get a loan, it's fixed rate, fixed term. When you pay it off, it's done, right? With the line of credit, you can keep using it. It's revolving. So if you have a project here, you pull that money, you use it for the project, then you pay it off. That line of credit's still available to use for the next investment property you're going to buy. So when you're meeting with your banker, that relationship's so important. So you both are on the same page and you understand what the goal is at the end of the day, then we'll, make the right decision, make the right product, and then everybody wins.
Hmm. Tell me, do you think that there's any specific red flags for like real estate investors or landlords versus like a traditional retail business, or are they sort of all in the same broad brush?
I would say it's all the same. It just depends. It's a very case by case situation. I can't say one is better than the other because everybody's story is different. Everyone's background, everyone's finances is different. So knowing the full picture per case will give us a better clarity of what steps to take. And being 21 years, I'm very, very transparent. If it's not a good deal, you're not going to get approved. I will be very honest with my client instead of giving them hope dreams that it's not going to happen.
What a good banker you are.
That's
I
right.
understand. I understand. Well, if you were to pick an ideal client, like the perfect loan applicant, what does their package look like when they walk into your branch?
So the perfect ideal client is a client that has a solid CPA or enrolled agent and a solid bookkeeper. So somebody who is taking care of their finances. Because the problem is, I find that business owners, they want to control it all, right? They want to control their business and their team and their money and their finances and their taxes and all the things. But that's not what they're good at. What they're good at is the business that they're doing. They're not good at taxes. They're not good at understanding cash flow or the balance sheets or the profit and loss or, all the finances that you need. If one of my clients come in, and I know all the great CPAs here and all the great bookkeepers here, and they tell me, this is who I work with, this is who I work with, here are my financials, this is what I want. I know, slam dunk, that loan's going to get approved because their numbers are pristine and not all over the place. So no matter what business you're in, it can be construction, it can be, doing nails, it can be real estate, whatever it is. If you have a good tax advisor and a good bookkeeper, you're on the right track.
Fantastic
And
advice.
let me
And
add a good banker.
yeah,
Sorry.
and again, of course, of course. Well, what's one piece of advice that you would give to a landlord who's planning to make a major purchase, let's say in the next 12 months? What's the best advice other than getting some great advisors?
Okay. So a landlord and you're making a large purchase.
Yeah.
Okay, there's questions I would ask, right? Is this your business? Are you purchasing something for your business or is it personal?
Okay. Well, let's say it's for business
Okay.
because savvy landlord investors shouldn't be necessarily buying anything personally. It should be in some kind of trust or a business.
Okay. So I would take your finances, your financials, and I would send them to me so I can analyze them and see if you qualify for the amount that you want. And if you don't, then we can talk about what we can do to change that. So again, every customer, every situation, every dream, every goal is a case by case. I can't say this is the perfect scenario for you because I don't know the full background. So it's hard for me to give an answer to that question because there's so many different categories that I would have to ask when I consult with the client. So sorry, Jen, I can't give you.
No, that's
I can say it.
beautiful.
Come see me.
No, I appreciate it. Um, so I know, in Hawaii, it's a different animal than on the continent. And then all of the different counties, the different islands operate a little bit differently. And you're on Big Island and Hilo.
Yep.
Unique market conditions. Is there anything that local investors on the Big Island need to be particularly aware of right now? Like, is there anywhere that they shouldn't buy property, that they can't invest? I'm thinking the volcano, but maybe not.
It's so funny because you think that would be a bad investment, but this is not, I'm not an expert, right? This is all just hearing stories from clients that walk in and out. And I have this specific client that is taking the risk and is buying property near the volcano, but they're mobile homes. So they're like
Oh,
lifting it up and they can because the volcano doesn't erupt and then it comes super fast. It's a slow and steady, lava flow. So his dream, and hopefully he's not listening to this because I'm telling everybody his dream, but this is just saying that I can't say that there are different areas or um, things to stay away from because people have these beautiful ideas that could possibly work. And the
right.
only way that you would know is you take the risk and see if there's a reward at the end. So I can't say the volcano because I think the volcano is absolutely beautiful when it erupts. I'm top of the mountain, so it's not near me. And when it does erupt, the flow is just, it's amazing and beautiful. And, the only thing I don't like is when Pele hair comes and lands on my car and it's like these little strings and people say, watch out, make sure you don't eat it because it might be poison. That's the only thing I can say, be careful with. But other than that, it's this big island is the best island. It's alive. It's, it just the other day we had a 6 point something earthquake that was insane. So it's alive. And there's a couple volcanoes that are, that erupt. And I mean, I'm just putting Big Island on a pedestal, but it's the best island.
It's the best island. Oh, you're so cute. I love it. I love it. Awesome. Jen, I'm so happy to have you on the show. If a listener wants to get a hold of you and learn a little bit more, how would they do that?
So I am located again in Hilo. We are the only branch on this side of the island, so they can always come to my branch, or they could email me at Jennifer, Jennifer dot Walker, Walker, at cpb.bank. Or they can call my cell phone. It's my work number, 808 That's 808-657. I forgot the last something something 33. 657-7033.
Nice.
Those are the two ways. Text me. I think that's the easiest way for me. But those are the,
Awesome.
yeah.
Jen, as we wrap up today's show, is there any parting thoughts you might have?
Pardon thoughts. Um, I think it's such an honor to be able to broadcast this, and I got this from you, Jen, the brand of CPB. I'm all about promoting this bank because I really do enjoy what I do. And, I've been in banking for 21 years and I've just noticed what's really, really important is the relationship that you have with each individual, no matter what milestone or part of the journey you're on today. I love that I'm there to hold hands and, get to enjoy that along the way with my clients. So my part in thought is just make sure when you're going through this motion that you do have a relationship with a banker.
Love it. Excellent. Thanks for being here. Appreciate it.